Welcome back to Your Average Investor, everybody. Today we're going to go over the S&P 500 and talk about if there's an opportunity to potentially short here. This is not investment advice, as always. Do your own research. This is just my opinion and for entertainment and education purposes only. Now, looking at the S&P 500, we've got a couple of interesting things happening that I want to call out. First is this channel that's been traded in, besides this little dip that took it out for a little bit in 2022, but this general channel that's been in an uptrend that seems to be faltering now. You can see it's faltering here right around 530. In addition to that, take a look at the volume. This is what I find one of the most interesting things is the volume of shares traded is decreasing down to an extraordinarily low number of shares traded today. You can see the volume candle here sitting at about a little more than a third of what was traded the last couple of days, and in general that volume has been lower than what is typical. We're getting about 300 million shares traded, then we've been popping down to 200 million, and then today not even 100 million shares of the S&P 500 traded back and forth. That to me is really interesting. Typically when you see a big move up, you want to see volume following that move. This is the opposite of that. We see the price staying relatively high, but volume is fleeing. Now, a misnomer about the price of something like SPY or any stock is that if the price is going up, it's because there are more buyers than sellers, and if the price is going down, it's because there's more sellers than buyers. And that's not true, because every time somebody sells, somebody else buys, so there's always an equal number of buyers and sellers. The difference is what's the price that buyers are willing to pay and what's the price that sellers want to get. So in this case, there's not as many people that are buying that are willing to pay at this price, but on the same token, there's also not a lot of people willing to sell at this price. So to me, that suggests that we're building for a big move in one direction or the other. I see two pretty likely scenarios pulling out of this. One is that this continues up to this upper trend line here, maybe hits like 540, 545, and then sells off. The second is that a sell-off starts immediately or relatively soon before moving to the upper end of this and comes down into the 500 or maybe 480 range. Now, there's some important reasons why I think the sell-off is likely beyond just the technical indications, and we'll get to those in just a minute. First, though, hit that subscribe button if you haven't already. Now we're back to talking the reasoning. Number one is economic data. So for the last several months, economic data comes out about jobs and inflation and other things, and then sneakily after the fact, the data always gets adjusted downward, so it's worse than the initial reporting. And what's starting to happen is we're starting to see some cracks in companies like CRM that reports earnings and takes a pretty big dip. Dell did the same thing recently, reported earnings, took a pretty big dip. And the S&P 500 is up primarily on gains from a few companies such as Nvidia, Apple, Microsoft. I think Netflix is contributing to a large number of the gains. Wow, I haven't looked at Netflix's chart in a while. This may be an interesting way to play a potential move down, is just to play down on Netflix instead of down on the S&P 500. But then the other thing is I like contrarian indicators. And I found a very interesting one today as I was looking at the options data for the S&P 500, and it is the difference in the put price versus the call price for these long-dated contracts. These contracts are 2.5 years to expiration. The call 530s are going for $8,000. The put 530s are going for $4,000, literally half of what the calls are going for. Now, this isn't just true of these most long-dated ones. If I go out to about a year, you can see the same thing, $3,700 versus $2,100. And I could even come into about 4 months out, and you're going to see $2,000 compared to about $1,400. So not quite as wide of a gap here, but still a large gap. And the reason I'm using the 530s is because the price is basically at there. So yeah, even though this is in the money, it's a lot closer to look at the 530s on both sides instead of the 530s here and the 525s there. Because again, the price is like right there, right in the middle of the 530s. So the fact that the put options are being priced so cheaply suggests to me that a lot of people are ignoring the risks of some potential downside. And one of the most interesting ones is the U.S. presidential elections, which this last time around with the swap from Trump to Biden was a wild amount of turmoil. You had, I mean, in the year leading up, right, you had the COVID thing, and then you had the BLM riots, and then you had, I don't know, there were a couple other things that just got nuts during the year, and I was like, wow, if this isn't the craziest election year ever, what is? And who do we have as the two front runners again coming up? We have Trump and Biden. So people have a very visceral reaction to Trump one way or the other. They either viscerally love him or they viscerally hate him. And the fact that he's the front runner, in spite of the convictions and everything else, suggests there's going to be some uncertainty around election time as election season gets upon us. I would not be surprised to see the S&P 500 falter and start selling off a little bit. I don't think that we're going to enter a massive correction, right? So like a lot of people have been talking about a 50% correction, like a true economic recession, depression type thing where the S&P tanks. I mean, at this point, it'd have to move all the way back down here to like 260 is roughly, you know, a 50% sell off from current heights, right? That'd be a huge move. That'd be back towards COVID lows. And yeah, that could happen. Like, I'm not going to rule it out and say it couldn't happen because who knows? There might be a lot of other things that go on that we don't know about. But there's a lot of concentrated risk in a few companies. And there's a lot of other potential events that are coming up over the next 6 months that could cause a lot of volatility to manifest itself in the market. Another example, of course, is with like NVIDIA, is what if China decides to make a move against Taiwan, and I'm pretty sure a lot of the chip manufacturing, if not all of it, I mean, by all I mean the vast majority of it, is based in Taiwan. And so if something like that happens, how does that affect NVIDIA's ability to get product to customers? And if they move, I mean, even if nothing happened with NVIDIA, but people just decided post stock split, which is coming up this Friday, that hey, it's time to take some money off the table, and NVIDIA, you know, sells off to, I don't know, let's call it $900 a share, or in this case $90 a share post stock split. Well, that's going to be a healthy pullback in the S&P 500 because of how concentrated NVIDIA is as part of that. Same thing with Microsoft, right? Microsoft is pushing all-time highs, or it looks like was a couple days ago, is significantly above these long-dated anchored volume-weighted averages. So I wouldn't be surprised to see Microsoft sell off back down to the 320s or so. Apple, I think, has a little more. No, it's pretty much up there too. We've got this nice potential triple top indicator. If you follow that stuff, I don't really follow triple top, double top, wedge type stuff because there's always like another pattern that is virtually the opposite of your pattern, but says that it's going in the opposite direction. But I do like just general support and resistance zones. And so that's interesting to me, right? Like we're coming up on a resistance area here for Apple, and we've got an okay support here for Apple with maybe some longer term support down here in like the 130s. But then you've got a lot of companies in the S&P 500 that are just sucking wind, like Disney. Like take a look at Disney. Disney has not done anything. If you want to look at this chart's going all the way back to 2014, 2015. So like Disney's basically flat since 2015. Walmart's a different story, right? Walmart's pushing all-time highs again, which is really interesting to see as, I mean, basically Walmart, Costco, etc. are just making a ton of money off of inflation. So look at that beautiful squeeze that happened, right? Coiled up, boom, spring to the upside. I wouldn't be surprised to see this come back down as people have to start tightening budgets again. But again, the interesting thing about Costco and Walmart is that, well, if you're tightening your budget, food is obviously the last thing to go. Like, you need your food. So it just becomes to where do you shift your food spend? Maybe instead of buying the expensive pork, you go buy less expensive something else, like macaroni and cheese, I guess. Buy whatever gets you more calories bang for your buck, calories per dollar, dollars per calorie. And then you've got companies like A&F. Like, let's look at A&F and GPS, right? GPS is another one. They just reported earnings. they both had phenomenal earnings reports and jumped on earnings, but there are also indicators that the consumer industry is weakening because they have too much debt that they're racking up, and they won't be able to continue to utilize that debt as they max out credit cards and lines of credit and things like that. So it will be interesting to see what happens with the next jobs reports, with the next inflation reports. Personally, again, this is just me talking. The way that I generally look at the S&P 500 is dollar cost average your way in for your long-term position, and occasionally hedge when you think things might see a downturn. So I hedge by selling covered calls. If you don't have 100 shares of SPY and can't sell covered calls, that's fine. Just hedge in other ways. Possibly, again, not advice, not recommendation for you, just my thoughts on it. So in addition to my covered calls, I'm also considering snagging some long-dated put contracts just to reduce exposure to some volatility here. The other way, of course, is to play the VIX, where you say, hey, you know what, volatility is at an extreme low right now, and historically volatility spikes every once in a while, so let's just look at like the VIX contracts for the end of the year. That would be right here in December, right? So maybe I buy some calls, and so calls here would mean that volatility is going up, which means there's some spooky stuff happening in the market. And so maybe I buy these call 13.5s, and that hedges me in case there's a big volatility spike and this moves up to like 20. I'd make a little bit of money off of those, right? That'd put this at a couple. If I bought it for 400, the 17.5 is break even, so I'd make 250 per contract. I'd make about a 75% gain there. If the VIX spikes to 20 by expiration, or of course if it happens before expiration, same thing. And of course that's when you just sell and start taking some of your position off. And if you get one of these bigger spikes, this is COVID spike. This is, I don't know, I think these are some Trump China spikes. Then there might be even more profit there. So that's another way to consider hedging. Anyway, wanted to share my thoughts. Hope you all enjoyed this. Again, it's just for education purposes. Hope you guys have a wonderful time in the markets. We'll give some updates soon on some other positions. As you can see, the challenge account here is doing quite well. Sold these cash secured puts yesterday for $22. They're down to $15. Probably is what I could buy those back for if I wanted to today. I didn't though, because I want to see some more volume bleed out of those, or excuse me, some more premium bleed out. So probably tomorrow or maybe Friday, if this gets down to like $10 or less per contract, I'll buy those back and look at throwing it into something else. And I would rather do that than hold over the weekend. Although maybe, the interesting thing is Roaring Kitty loves posting Sunday night, and so maybe Sunday night is when we see another big spike up again. Be interesting to see what happens there. Anyway, thanks for watching. Catch you next time. Have a great night.